All right. Good morning, everybody. It's Friday. We made it. We're still seeing a rally pretty good in the dollar. This continues to be a global haven for risk. Interesting enough, it's not correlating in with the VIX, which is normally what we would expect when we see, markets around the world getting into the dollar. It's really just the idea that they're trying to find a place to go, right? They will be fined if they go to cash, so they don't want to go to cash. They got to go into something. When they feel things are risky, they'll get into the dollar, at which point it becomes a little bit of a risk off sentiment. But generally, when we see that, it ties in or pairs in with a VIX moving in the same direction, and we haven't seen that. Still want to keep your eye on the dollar. There's been a lot of weird stuff going on with the banks, the bond, the dollar. I even heard on Bloomberg this morning the same thing. They said the banks are just off right now. So, well, good. At least I'm not the only one that feels that way. Let's see. We really don't have a lot on the agenda today when it comes to the market watch. 8:30, 10 o'clock, and 1 o'clock. That rig count, it really doesn't have anything to do with what's going to rock our market. So by 10 a.m., we ought to be good to go. I looked around for Fed speakers today, and I didn't see anything on that either. Yesterday, everywhere you looked, there was some headline talking about Fed speakers. They were really pushing the agenda that they were going to talk yesterday. Today, I looked around at all of my normal sources and I didn't see anything. So maybe there will be a Fed speaker somewhere today, but they're certainly not pushing it agenda-wise like they did yesterday. All right, so as we do every morning, I want to game this out. We could just toe the line between yesterday's high and our Globex low, or even between our Globex high and our Globex low. It's a pretty muted range when you think about it. And yet it's more than enough. We are up 0.25% this morning. Looks like we're starting to print a lower high, but we are getting that higher low in there. We could very easily just end out the week right there. There's a lot of angst, a lot of uncertainty. We got banks kicking off earnings next week. It's just a whole lot of unknowns. And it wouldn't be very surprising if we stayed right there. It's always on the table that we can have a range day. And while I don't really feel like this is going to be one, we absolutely could get one. Interesting thing, I had somebody ask yesterday why I called that a range day. Well, until the very last bit of the day, we were sitting inside of yesterday's price action. And if you have a candle right next to another candle, what else do you call that? The good thing was it was an absolutely phenomenal move off of yesterday's low. Institutional pivot point. Still a range day. Was there trend in that range day? Absolutely. Beautiful, amazing, seen it coming a mile away trend. There was trend. but it was still a range day. If we look at today's range from 45.20 to 44.90, that's a 30-point box. Plenty of room in that 30-point box to have really clean, awesome, amazing trend. So I'm not saying that you can't see some trend in there. I would still call it a range day, because if we're sitting inside of our own Globex, if we're sitting inside of yesterday's price action, then we didn't go anywhere. So that's game plan number one, that we stay range bound. Scenario two would be a similar picture of yesterday, that we end up breaking out of the range and begin this process of moving back up. We talked about the failed flag the other day. Multiple day trend to the downside, building a base along the lows, breaking out and reciprocating back up to those previous levels. So that's what we would continue to look for. If we were to break to the upside today, we've got to get past that cog line, 45.11. We have a pivot point at 45.30. And anything beyond that, I think we really have to go out and look at the volume profile, just to kind of get a measure of how far away that is. It's another 0.35%. We're already up 0.35%. So that gives us 0.7 on the day. That's not bad. Forgot to measure something yesterday. I might as well do it now. From where we closed to the highest point of that run, sure enough, it's a 1% move. I told somebody yesterday, they said, how high do you think we're going to run? 1%. We rallied up off of the lows and we were headed to the upside. And this is something, if you go back and look, it hits about a 1%. That's what we got before we faded off again. So it's not like this is magic, right? We just look at what's happened before and kind of game out what do we think is going to happen again. What's more likely? All right, so past 45.30, we've got the point of control. They're really close together. I'd rather just take mine off and leave the point of control on there. So if we happen to break above our own Globex high, the target would be the point of control 45.33. If we get through that really big resistance area, we'll aim for the 1% on the day. That would be 0.7 from our current location, basically putting us at around, I'd look at 45.50 as that upside target. Just keep in mind, it's unlikely that we're going to be able to get past that point of control unless we get some really good news coming out. And we don't really have anything on the agenda today, economic-wise, that would bring us that kind of fuel. So it's on the table, 45.50, but getting past that point of control at 45.33 is going to be a real chore. I just don't see a path past that spot without some real news coming in. So we might as well game out the other direction too. What if everything gets negative and we start heading to the downside? We talked about the Globex high. Now's the time to talk about the Globex low. That would be our first thing that we would need to worry about. There is the close or the Globex open. You could look at it from either point of view. But we've already passed through that area a few times, and it loses its validity the more times we pass through it. There is also the IB. That's initial balance. Mark initial balance from the starting point at 6 o'clock and mark the highest and the lowest point for the next hour. So from 6 to 7. It's a little bit like an open range, only when we run the open range, it's user discretion on what you want for an open range, a 5 minute, a 1 minute, a 15 minute, 30 minute, 1 hour open range. It's really on you to choose which open range you want. But initial balance, it's out of your hands. You don't get to choose what you want. It's a 1 hour open range. The idea behind the initial balance is if it was really narrow, then the firms haven't got their work done yet. And there is the potential to make some good moves later in the day, kind of assuming that at some point they're going to need to get their work done. On the other hand, if it was a really wide initial balance, then you got to kind of assume they've already accomplished whatever tasks were given to them today, and they don't really have any reason to come in and participate in the market at that point. I would consider this a fairly muted initial balance. So for that downside discussion, if we do happen to break through our Globex low, that will put us inside of Wednesday's and Thursday's price action. To the low of yesterday would be a 1.6% move. We're already up 0.4. That put us at a negative 1.2 on the day. It's not that bad. It's easily within reach. And just, I see that as a bit extreme. I don't think that we would make such a move like that without some form of negative news. And the economic events that we have on the agenda today don't have this kind of impact normally. I say that because there are times where something that shouldn't cause concern suddenly does, right? Like some random little survey that most people blow off most of the time. Suddenly one day, everybody freaks out over the answer on a survey. So generally speaking, I don't see a path down to this. But if we do start making that move to the downside, yesterday's low and Wednesday's low are exactly where our target would be. So nice, clean, clear number. If we kind of ask the question, is there anything down there besides that low that we could maybe bump our head on a little bit, find some support? At 44.70, we get a little bit of help from the volume profile. So, it's worth noting that it's there. I don't know how much help it would provide considering, we've passed through that like it wasn't there before. So it's just something to keep in mind. And we are back inside the box. Take a look at the NASDAQ. So unlike the S&P, the NASDAQ still within that range. It's back above that weekly expected move, which is nice. A bit muted on the day. We've gone percentage-wise the same distance that we've gone in the S&P, 0.4%. Kind of want to ask that question. If we were to make an upside move, how far could we get? If we add 1.7 to what we already have, putting us at around a 2% move, that would be 14,850 is kind of my target. I know it doesn't match up percentage-wise to the penny, but if you get that close to the roundy, you're basically going to go to the roundy. So 14,850 to the upside. We could very easily stay within this range that I have drawn here. 14,650 down to basically 14,400. It's a nice 250 point range. Plenty of movement, plenty of room for movement in there. And of course, should we break out to the downside, yesterday's low would be the target. That's a long ways off. I don't see that we would get below that target without some very extreme negative news. We basically have the same drawing and setup that we did on the ES, only we're not inside the box, we're outside the box. And when we're outside the box, we have every expectation of price moving back inside the box. So that'll be the game plan, that we begin moving back towards the inside of the box. We haven't really gotten a lot out of Bitcoin in the last few days. It's been kind of quiet over there. 10 years still fading off. The dollar is still hitting highs. Starting to get some topping pattern there in the dollar. It's kind of worth keeping an eye on. Oil had a real nice reversal yesterday with the rest of the market. Kind of stalled out. It's been range bound. It didn't participate in this overnight run that the rest of the market did. And the dollar and the VIX are still off. So we're looking at the dollar and considering it a symbol right now of global risk. And yet it's not matching the VIX in any way at all. I mean, it's just completely decoupled, which is, I mean, it's kind of good from the point that we don't want them to be coupled, but it's not good from the point that it doesn't make sense, right? When things don't do what they should do, then it just kind of screws up the whole picture and has us wondering what the heck is going on. Keep your eye on the dollar today. It's really important. The dollar and the bonds have been driving this market. When you're trying to make decisions about, getting into the trade, trying to find confirmation of the move, asking the question, has it gone too far? Is there still room for me to get in? These are the tools that can help you make that decision. And nothing in the world is going to give you an absolute guaranteed answer, but you're looking for high probability setups and what's more likely outcomes, right? And then you just pull the trigger, take the trade, and if it begins to lose, cut the damn thing and look for another trade. I continue to hear from people who say, I had a really bad day today. It was big loss. There is no way you should ever get a really big loss, ever. You can have a lot of bad trades and have a lot of losses, but none of them should be a big one. If you are getting big losses, you're absolutely doing something wrong. Somebody else talked to me yesterday and said they were having a hard time in this market trying to find something to trade. Now, I focus on options. It's just, it's what I do, but it's not the only thing that I do. So I turned on my scanner this morning and just to prove a point, there are plenty of things out there to trade. This list that I'm about to start jumping through has weekly options. Now, just because it has weeklies doesn't mean it's really liquid, but it earned the right to have weeklies through liquidity. So we can at least say that, right? And if I removed that filter and actually ran the same scan without the request of having weekly options, it would be a much greater list, right? So just kind of keep that in mind. I'm going to change the time frame of this chart. We're going to take it out to a 10-year on a weekly. Now, let's make it a 5. We don't need the whole 10. We're just trying to get a little bit of perspective. Healthcare, UNH. Johnson & Johnson. Now, that's a really big cup, and we don't quite have a handle yet, but we are breaking out on the year and outside of yesterday's year. Walmart, same thing. Abby, like a freaking rocket ship. Eli Lilly, Coke breaking out on the year. Costco breaking out on the year. AstraZeneca. You see what I mean, guys? There's plenty of things out there to trade. Now, granted, at this point, all of these have already gone just bonkers, right? You wouldn't want to go and try to get into a lot of these at this point. But you know, a lot of these don't look like Abby. They're just now getting started breaking out on the year. PBR, Vortex Industries, or Vertex Pharmaceuticals, Dollar General, just breaking out on the year, right? Think about where we opened in January and then having been down all of 2022, and it's just now positive on the year. You're getting in right at that beginning point where it's getting positive on the year. This is where IBD talks about getting in, right? I don't really like waiting until it finally breaks out of the top to get into markets like this, but you know, that's IBD style. So if you're thinking, well, I don't want to get in when it breaks out to all-time highs, I don't blame you at all. Maybe you want to wait for a pullback, but go back and look at Lilly and ask, you know, is Dollar General actually going to give you a pullback? I don't know. The point is, though, that there are plenty of names out there right now that are doing good, that are hitting new highs, that are just continuing to be strong. And things that are strong, that are doing good, are expected to continue to be strong and do good all the way up until they don't, right? Which is usually an earnings report, a change in market sentiment, that there's some external input that kills the continuation of the move. Hewlett Packard, ABC, the healthcare sector, which ties in, you know, with Johnson & Johnson and United Healthcare. There's plenty of names out there. And again, we're looking at ones that have weekly options. If you got rid of that filter, you would find that there are a lot of names out there that are doing good. But everybody focuses on Tesla and Apple and Microsoft, and it's the FANGs, right? It's the FANGs, and it's Disney, and it's AMD. Nobody's looking at any of these other things. So if you're new and you're thinking, you know, everything is really nasty looking and then there's nothing to trade, there's plenty of things to trade. You just have to consider what else is out there. Right? All right. So looking at what's moving around this morning, emerging markets is up 0.75%. That's our global risk on sentiment indicator. We consider the morning to be bullish when that is positive. Financials, healthcare, technology, energy, minerals and mining slightly, and Bitcoin slightly. The things that are in the negative are only slightly in the negative until you get to IYT. And then cloud computing, CLOU. Now, CLOU is an ETF that we use that looks at companies that have cloud services. Show you these names, they'll make perfect sense. So, you know, Dropbox, Plan, Netflix, WDay, Shop, Twilio, and you know what? I don't see Google on here for an example. You know what I mean? Like I don't make up this list. These are the names that make up this ETF. Okay. But this ETF is up this morning, which means these names are moving that ETF this morning. Looks like FSLY is one of those that are up a little bit this morning, and Netflix too. And IGV is another one that has, it's like an expanded tech ETF. These are the names that make up this expanded tech: Adobe, Salesforce, Microsoft, Oracle, right? Activision, Inuit Software. This one's up this morning too, kind of implying that a lot of these big name tech companies are up this morning. All right, so we want to check out the heat map, S&P 500. We want pre-market change percent. We need to knock the filter in a little bit. Since we don't really want to look at 500 names, we want around 100 names. It's hard to hit 100 names. Just get close. You can see that there's a lot of gray. The gray is there because if it hasn't moved at least a half of a percent, then it won't get a color change. So we just go up to the 1x and drop that multiplier down to a tenth. Now it's more responsive. And you can see all of the FANG names standing out, right? Tesla, NVIDIA, Apple, Amazon, Facebook, Google, Microsoft. They're all lit up. Although, I like to see things that have moved at least a half of a percent. And a lot of these haven't hit that benchmark. Apple, Microsoft, and Google, for an example, are just barely up this morning. Negligible, right? Same thing with Tesla. Tesla lifted the market and carried it across the finish line yesterday. It was a pretty impressive move by that thing. You would think it'd be a little exhausted at this point, but that was a lot of heavy lifting. So when you're looking at this list, you really want to try to get a grasp of what's going to be your focus on the morning, right? Because you got to try to narrow down all of the stocks that are out there, put it through the funnel, and have 2 or 3 good names at the end of that. Looking at the sectors, the industries, the sub-industries that are out there, kind of getting a grasp for what do you want to focus on as we come into the open. Now, I run this morning briefing, early in the morning so that I can get other things done before the open. You would want to go back and kind of retrace these steps as we get much closer to the open because a lot of things can change. Today, not necessarily do we have a lot on the table, but on other days, we would have economic events that would come between now and 9:30. And the dollar opens, the bonds open at 8:20, the dollar opens at 8 a.m. Those oftentimes can change the entire shape of the market as we come into the open. You have the European Union and central bankers over there chipping their teeth because it's like, midday for them. So they're right in the middle of their news cycle, and they can have news that comes out and kind of starts rocking the market at 2. Swap this over from the S&P 500 to the NASDAQ 100. We don't need a filter because it's already 100 names. We're just going to change that multiplier again so that the color scheme is more responsive. And again, you can see the FANG names stand out. They're the biggest box because they're the most heavily weighed names in this index. So the bigger the box, the more weight they have in that index by market cap, right? There are price weighted index and then there are cap weighted indexes. Not much of a surprise. We're seeing a little bit of comeback in Starbucks. And not much of a surprise either, NVIDIA. I was actually talking about this yesterday with somebody. NVIDIA had dropped like 19% in the last week, right? Just an absolute beatdown off of that high. It may not look like much, but we went from 290 to 240 for the close of yesterday, right? That's an absolute amazing move. You got to kind of expect that it's going to start to pull back at some point, not because we're suddenly bullish, but because mean reversion and linear regression alone suggests that it's got to pull back in the other direction, at least momentarily. That's going to present us with a red to green setup in NVIDIA this morning. By the way, it's one of my go-to day trades. And someone asked, how would we approach that 52-week high trade when I was going through companies that were at their yearly highs? There is a strategy for a 52-week high, not something like a BBV, which is a rocket ship getting close to the moon at this point. But maybe something that's just breaking out on the year, like Dollar General. 52-week pop. It gets a new high. We look for it to consolidate for a few days or a few weeks. We enter a stop order each day, 25 cents above that initial 52-week high. And you only want to enter the order for the first hour of the trading day. The breakout should follow and be powerful enough to continue it. If you are filled, you place your stop order below the low the day was made prior to your entry. If you are not filled, you take that order off after the first hour. Take your order off after the first hour if you're not filled. Don't leave the damn thing on the dome and forget to turn it off. So if we take these steps, we got a new 52-week high. We're on a daily chart. After we've got this new high, we would expect it to consolidate. So not today. In the next few days, we're expecting some consolidation, some kind of sideways price action. So if we get another green day and another green day and another green day, this strategy is off the table. But if we pause now that we've made that new high, if we pause here and we don't continue to make new highs, then we want to start thinking about this strategy. We would see price collecting along this area. When it's collecting along that area, every morning as we come into the open, you would put your entry in 25 cents above the highest high point. After the first hour, if you're not filled, take your order off the dome. If you are filled, your stop will go underneath the lowest candle the day before your entry. I don't have multiple candles to point to for that. But if you can imagine that there's 3 or 4 or 5 days worth of sideways price action here, and you were to get in today, your stop would go below the low of the previous day. It's a 52-week pop strategy. If this is something that interests you and you want to see more stuff like this, there is a book in the Bullish Bears Discord called Hit and Run Trading Part 2. It's a really good book. It's an easy read. It's fun. The guy's got a little bit of humor. It's not a really big book. And he gives exact criteria, just like this, about how to manage the trade, where your stop should go, why the trade is even focused on this kind of pop and drop consolidation and then rally. It goes into all of that. So on the Discord, in the Bullish Bears, the Traders Resource Zone, just scroll down here. Trading Books, Hit and Run Trading, Part 2. If you like the book, buy it. Go buy it. Help the guy out. Support the artist, I don't recommend buying it until you've at least tried it, right? That's why we have the PDF, so you can read it, check it out. But if you use it and you're making money on the guy's material and you learn something from it, buy the book. Put it on your coffee table, right? Make it something that you can talk to people about that come over to your house. I don't know. Support the guy, right? I've been trying to write a book for 2 years now, and it is hard. It's a lot harder than I ever thought it would be. So that's how you would do one of those trades. And for the question about the size of a stop that I use in my futures trades, the stop is appropriate to the size of the target I'm trying to hit. Sometimes I use a fixed stop, meaning I already know the size that I want to use. And at other times, I measure what my target is expected to be, and I adjust my stop based on that. I still won't exceed a certain percentage out of my account. And that percentage, honestly, is none of your business. But you can have the same concept and approach it from the same way. Do you want to put X amount of your capital at risk per trade? Are you going to use a set fixed stop per trade, or are you going to adjust accordingly depending on the kind of trades that you're doing this day? When it comes to money management and where your stop should be, you don't really want to ask somebody else, right? That's like handing somebody else your wallet and saying, "Will you manage my money for me? Just tell me how much I should allocate to the landlord and how much I should allocate to the car company and the insurance company." That's something you're going to really want to manage on your own. Plus, you got to sleep at night. When I take trades in the futures and swing them, I certainly wouldn't want to ask somebody else what my stop should be. Someone with a $500,000 account may decide that their stop and my stop should be the same size stop, and I don't think so. So what I got for you guys: be careful, be safe. Nobody is scheduled to stream today, but I'm gonna do it anyways. I kind of like streaming on Fridays. I think it gives people that maybe are a little shy and don't like to ask questions, it gives them a chance to come in and ask questions without feeling like they're interrupting. So the stream will start at 9:15. I'll be in the large caps room, but I'm not going to cover pennies because I just don't think I have anything to offer penny traders. But, we'll look at futures, we'll look at stocks, we'll find things to trade. Certainly keep an eye on the market and maybe go over some scan settings, how to put some watch lists together, whatever, right? We'll go wherever the conversation takes us. That'll start at 9:15. I'll see y'all there.